I feel that this strategy is a lot better to accumulate in a period where we're not guaranteed that the market will trend up.
Fed Chair Powell is not starting quantitative easing just yet. And so are we going to have more sideways action? Possibly. But there's one strategy that works during those types of conditions, and that's the grid bot strategy. So, of course, I had to bring in my friend Crypto Rookies. Patrick, how are you doing today?
I'm doing well. I think it was a bit surprising what happened yesterday with the market and the FOMC meeting, but I guess it was to be expected a little bit.
Yeah, it was the market pretty much expected it and they had it priced in, but there are some signs that potentially getting two rate cuts, right? So the market is looking at it from an optimistic perspective. However, who knows if we're going to see that parabolic rise until the end of the year? At least that's what you believe.
I think I was expecting that we would see probably the market really pump pretty hard before, like May and June. But given the FOMC meeting of yesterday, I think it's going to take quite a long time before we go into quantitative easing and reducing the interest rates. Because there's a meeting once every month and a half. So the next one will be pretty much in May. Yeah, in May, mid-May, um, almost. So, and I'm saying right now, I think the market did priced in that there was no rate cut. That was okay. But the market did went up quite a bit on the news that they were slowing down quantitative tightening. So this was the part that was kind of unexpected a little bit, I guess.
And so today we're going to show the viewers that there's a grid bot strategy that we can apply. You even have your own signals to look at. So we'll go over that as well. And so there are opportunities to make money in this market. Obviously, none of this is financial advice, but we'll go over what those tactics are. So that way, even if the market is going sideways because we don't have the quantitative easing that we're all looking for, we can still find ways to generate money.
Yeah. So at this point, I'm not as confident that as I used to be that we'll see like a all-time high too much before the end of the summer. So in the
Yeah,
meantime, we have to be able to survive the market either going down or going sideways. If it goes up, then we'll be happy. Like the strategy with the grid bot works in all directions. But obviously, it's better when it's trending up. So.
All right, Patrick. So let's go over some of these indicators that you're looking at. Tell me about this one. This is the GMT/Tether US perpetual contract.
Yeah, so the indicator is, I call it the grid chop index. And the reason is because, there's indicators that talk about volatility and things like that for like whatever assets you're looking at. But volatility, like let's say that the price go up, goes down, and then goes up like a few times, but in a range. The volatility indicator will not really account for how many times it go up and down during a time frame. But for a grid bot, the more choppiness, it's kind of different than volatility, the way that people calculate volatility. So I had to create an indicator in order to assess like the choppiness, like up and down, at how many times the price go up and down, like in a time frame, because that is what triggered the bot the more often. And the more often the bot trigger, the more yield you generate. So you want to find assets that have the most choppiness possible, like in a certain range. So for example, right now you're looking at GMT. That is step in. It's a project that I often like to short because it's a terrible project. As you can see on the chart, like it's on a month time frame and it's only been going down pretty much. But the choppiness and the index in this case, it's like right now is at what 47%. So it's highly choppy, that one. So that's what you kind of like when you're running a grid bot. And you can also look at the chop the grid chop index for Bitcoin. So the thing on the bottom pane you see, that is the grid chop index that you have. And at some point in time, like even for Bitcoin, it was really high, like even above 80%. But now it's down to what, 22%. And you see that over, like this is on a month, kind of a candle size. So that's a really long time. And you see that over the years, the choppiness of Bitcoin has reduced, which seems to make sense because it's much more like capital intensive now. There's a lot more liquidity in Bitcoin, so that's why that over time the choppiness is reducing that much. Like to me, and I think it makes sense that Bitcoin is less choppy than step in because it's a much larger market cap and all that stuff.
It sounds like what you're saying is you want the volatility on a micro level, but on a grand scheme, you want it to stay within a certain range. So you want it to be choppy, but stay within a certain range.
That's the thing. And that's saying the less choppy it is, like you would get close to, like, let's say a stable coin. But all that means is that your range on a stable coin for a grid bot would be a lot more tight because the chance that it goes outside of like a large range is very negligible. It happens from time to time when people try to depeg a stable coin, but it's really rare. Meanwhile, if you have a very tight range, you can still make quite a lot of return, and that depends on how much leverage you put also. But I think that basically the choppiness index will tell you how safe it is for a given range. So that if you want to achieve good result with Bitcoin, that just means you need a tighter range compared to GMT if you are using the same leverage. But you
Got it.
need to see when there's kind of outliers, because the outliers is what could kill you and liquidate your account. So you still have to be afraid of that. But in terms of Bitcoin, it's over time you see that it's getting a bit more compressed and there's a lot less outlier. Even if there's a black swan event, Bitcoin is just not moving as much anymore. So it's a lot more safe. So we
Got
can
it.
take a look at this other screenshot that I sent you with the grid bot and the returns. And you can zoom in a bit on the upper side. So this one, as you can see, has been active for 21 days and 16 hours now. And the match profit, this is how many times the grid bot has closed a buy and a sell together as a pair of trade. So this is typically always positive, and it keep increasing. It never goes negative in theory, unless you're losing money on because your grid is just too tight compared to the transaction fee for the trade themselves. But typically, in my case, it's always positive, and it keep increasing. So, and right now that is 8.55% over a period of like 22 days. So that means that once the month is over, like in basically 8 days, I'll be above 10%, I'm pretty sure. So 10% per month on Bitcoin, it's basically amazing when you think about it, because this is the accumulation of Bitcoin. This doesn't account the price increase of Bitcoin. And in this case, like if you scroll down a bit, yeah, here. So I launched that grid bot when the price of Bitcoin was 84,360. And then if you go back up where, like when that screenshot was taken, the price was 85,335. So it's not a huge gap between the two, but because I accumulated so much yield when the bot keep triggering, that's why my total profit is at 6.48%.
I see.
And think if the price of Bitcoin then goes to like $200,000, uh, I will have accumulated a lot more Bitcoin over time, because like it will be about 10% per month in this case. So on a per year basis with compounding, we're talking about maybe an extra, it's more than 100% per year. Like the one thing that is important to understand is that this is an inverse perpetual. So that means that all of the profit are accumulated in Bitcoin itself, not in USDT. So this is what I like to use when I know that we are not anywhere close to the peak of the bull run, because then I just keep accumulating more Bitcoin. And I'm saying in this case, if I can do 10% per month on Bitcoin, just accumulating more Bitcoin, regardless of what the price is, I think it's very acceptable in terms of return, because once the price of Bitcoin goes up another, let's say 2x, this will mean that I will basically be getting more than a 4x in total. So I think it's very acceptable given the risk. And the one thing that to mention is that I said that previously, like if the price go down and the total profit is negative, and then you have to reset the bot, but with a range below, I would probably in most cases increase the leverage. But it turned out that this is not necessary. And the reason is because there's the match profit, the yield that accumulate, you end up losing less on your trade than if you had the exact same trade with the same leverage, but without a grid bot. So if you were taking a long with this position size and the leverage of this is 3x, and everything the same, but not a grid bot, that means that if the price go down, you would be losing money faster than if it's a grid bot because you don't have the accumulation of yield that pad and increase your and basically reduce the loss basically. So that means that even if you have to reset the bot in a lower range, it turned out that you don't really need to increase the leverage to take more risk. You can just you'll be in a loss in terms of US currency, but overall you will recover eventually as the price go back up on the long enough timeline. And the other thing that is interesting here is that in the last 24 hours, this bot triggered 82 times. So this is not that much. And we can take a look at my other bot that is active on Solana. So in this case, in the last 24 hours, this one was 170 trade. If you scroll down to the bottom, yeah, it's saying 170. So it's twice as much compared to the Bitcoin. But that's just because the choppiness indicator, the index, is much higher on Solana than it is on Bitcoin. And I could make my range more tight on Bitcoin to compensate. But in this case, yeah, it just triggered more often on Solana, given the range I picked on that one, which is between 100 and 155 for Solana, the price. And as you can see, this one, like I activated this bot 9 days ago, pretty much, and the match profit is already at 7.20%, and the total profit even greater than that. So yeah, I feel that this strategy is a lot better to accumulate in a period where we're not guaranteed that the market will trend up. So if it goes sideways, we are still accumulating with this model. And if the price end up going down, sure, like do you keep like USDT aside in the hope of buying back when the price go down, or you keep accumulating yield with this? Maybe you do a bit of both, but for me, I don't have that much US currency on the side. On the other hand, I do have Bitcoin that I can take loan on Aave. So if I need to add and buy more because the price of, let's say, Bitcoin crashed a lot, I can take a loan on my existing Bitcoin on my other account. So I think combining those two strategies works pretty well for my case without having to keep too much US currency aside that is just a melting ice cube, basically.
Well said. And Patrick, how can people get a hold of you if they want to learn more about the strategy and if they have any questions?
On Telegram, I run a private Telegram group. It's free. And I've shared a lot of insights into that. Meanwhile, also on X, you can reach out to me there. And I have a YouTube channel where I go into more detail about those details. So those are all the places that people can reach out to me.
Perfect. We'll be sure to include the links in the description. And if you enjoyed watching this, please subscribe to the channel, like the video, and share it with your friends. And until next time.